Hello, and thank you for joining us today on our presentation and webinar of FSA versus HSA. Today we will be discussing the differences between the two accounts and the benefits of setting up either account. Let's get started with an overview. FSA stands for Flexible Spending Account. We have three different types of FSA accounts that you could enroll in. Our provider for FSA is Navia. You're able to elect and enroll in an FSA account should you decide to enroll in plans 2 or 3 of our medical benefits that are offered. With an FSA, you are able to contribute money from your paycheck pre-taxed. That dollar amount could be any amount, something as small as $10 per paycheck, or if you would like to increase that amount, it could be up to $100 per paycheck. Again, the benefit here and huge tax incentive is that these contributions that are being made are pre-taxed. So that dollar amount that you choose is the full dollar amount that goes into your savings account. Funds are available to use towards medical expenses, and should you decide to set up a flexible spending account, dependent care, or a daycare, those go towards daycare expenses. Once more, tax-free, so an additional tax incentive reflects here. For HSA, this stands for Health Savings Account. Our provider for our HSA accounts is Optum Bank. Anybody that enrolls in our Blue Saver medical plan is automatically enrolled into an HSA account. You then have the option to contribute money into this HSA account. Once more, that dollar amount could be as low as $10 per paycheck, up to $100 per paycheck. Again, whatever financial dollar amount you see fit is up to you. Once more, those dollar contributions are pre-taxed. A major difference with an HSA account is that your employer can also choose to contribute to this account. We will go into further detail throughout our session today in reference to what Nolan may contribute to an HSA account. For all of our HSA account, funds are available only for medical expenses. We will go into detail in reference to what some of those medical expenses are, as well as provide you with some additional links in order to review those resources and see what all qualifies as medical expenses. As we continue our overview, for our FSA accounts, should you set up a FSA account, you do receive a debit card. This is mailed to you for payment use. If you set up a dependent care FSA, there is no debit card for this. That reimbursement is submitted differently with your invoices from your daycare facilities or however the services are set up that you're using them for. With your FSA account, those funds do not roll over year after year. You must use the funds that are in the account for those medical expenses throughout the year. However, should you not use all of the funds that are in that FSA account, you are able to submit a claim and retrieve any of those funds before the end of the year. There is also a grace period that we will discuss further in our session in reference to the funds that are in the account if you so happen to not use all of them. With your HSA account, you receive a debit card regardless, so that you are able to use that debit card for payment use. And any funds in an HSA account do roll over year after year. So if you have $100 left over in your HSA account at the end of the year, that will remain in the account until you decide to use that for any type of medical expenses, or it will continue to build into the following year as you begin contributions once more. Let's talk a little bit about our FSA contribution details. So once you've selected an amount that you're wanting to contribute to an FSA account, you are not able to make any adjustments. It is set in stone. The only opportunity that you have to make adjustments to an FSA account is during open enrollment or if there's a qualifying life event that has occurred. This qualifying life event, some examples are birth of a child, marriage, death, divorce. Once more, anytime that you make adjustments due to a qualifying life event, you do have to submit documentation and verification of the event, and adjustments must be made within 30 days of the event occurring. There are caps of contributions for an FSA account. If you have a healthcare FSA account set, the max contribution amount per year is $2,750. Should you set up a daycare dependent care FSA, the max contribution amount is $5,000 per year. Again, these are pre-tax dollar amounts. Any funds that are available in these accounts are used towards healthcare expenses for yourself and for your family. You do not have to have a family member listed as a dependent or covered through your medical insurance. If you're wanting to, for example, let's say my daughter needs a prescription. I don't have her listed under my health insurance. She's listed under a different provider. I can still use my FSA account and debit card to purchase her prescription. Okay. And then, of course, any of your healthcare savings expenses for yourself, you're able to use as well. If you have a dependent care FSA account, those daycare expenses for any children under the age of 12 is what qualifies for you to use those funds. Or if you are caring for an elderly individual or dependent, you are able to use the dependent care FSA for those costs as well. And we'll dive into a little bit more detail as to what are qualifying expenses for our dependent care FSA. Biggest aspect of our FSA accounts is saving money. I know if you love saving money, this is going to be a huge investment for you. A little bit about how we can save money on a yearly basis. On average, an individual or household may spend up to $1,400 per year on out-of-pocket healthcare expenses. Whoa, that's huge. If we think of out-of-pocket healthcare expenses, this could be something as small as Band-Aids that are used for medical or healthcare needs, or as high as doctor's visits, procedures, surgeries, equipment. Those are all categories of what are considered healthcare expenses. Knowing that information, and again, thinking about some of those day-to-day expenses that we may have, or month-to-month expenses that we may have pertaining to healthcare, truly do add up. And again, an average of $1,400 is definitely reasonable. With an FSA, that average would be brought down to about $980, obviously assuming an average tax rate of about 30%. So that's a huge savings. Again, because everything that is being invested into your FSA account is pre-taxed, and then of course once you're paying for that, those expenses become tax-free, is where your difference in savings comes into play. Let's talk about another example on how you can save on your annual tax savings. One example given, and we'll look at a breakdown here momentarily, is an average of about $1,878 in an annual tax savings, or if you break that throughout the year on a monthly basis, you could be saving as low as $156.50. How is this possible? Well, let's look at this visual representation. If we take an average gross income as well as average living expenses and an average of medical and daycare expenses to break down this example. We are going to look at an average gross income of $41.67 on a monthly basis. We then are going to take out an average of medical and daycare expenses of $625. Again, should you not have an FSA account already set up, those expenses are going to come out directly from that gross income. So you're looking at $3,542 of your gross income. You then are going to take out your taxes. On average, again, about 25%, $885.50, leaving you with $2656.50 for your living expenses. With your take home, should you have already invested into an FSA account and put those medical average expenses of $625 into a pre-tax savings, you can take that $2656.50 with your assumed, if you had not set up the FSA account, of the $2,500, leaving you the $156.50 of a tax savings. Again, multiplying that by 12 gives you the $1,878 tax savings per year. And once more, had you been putting that $625 pre-tax dollar amounts into your FSA, you can see here the $7,500 savings that again would be applied directly to your medical or daycare expenses. Once more, huge tax savings. So what are considered healthcare and medical expenses? We will be providing the link below in order for each and every one of you to have access to a specific detailed list. As benefits are updated on a year-to-year basis, so are any type of qualifying expenses. So newly added to the list this year, over-the-counter prescriptions, feminine products, and then of course, the links below will provide you with more details. Some of those details are going to be, again, as mentioned earlier, Band-Aids is on that list, various medical equipments, various medical services are also listed below in the links provided. As mentioned earlier, with an FSA account, we do allot a grace period of 2.5 months to cover end-of-year medical expenses. So for example, if you have a procedure or an appointment that you've attended towards the end of December and know that you have funds in your FSA account, you can wait for that invoice to come in and use those funds to pay for that invoice within that 2.5 month grace period instead of losing the funds that are there. Because again, as a reminder, funds in an FSA account do not roll over year after year. What are considered daycare expenses? So once more, if you have a dependent care FSA, you are going to be utilizing this for any children under the age of 12 qualify for this. You're able to pay for the expenses of daycare facilities, camps. Another major listing on our detailed list is nannies or babysitters. And then, of course, once more, should you have a dependent care FSA for elderly care, those funds can go for expenses for adult daycares or any type of elderly care facilities. So let's switch gears a little bit and talk about our HSA. What does an HSA cover? When do we qualify for an HSA? So as mentioned, the only time you can have an HSA account is if you are enrolling in our Blue Saver medical plan, which is our high deductible healthcare plan. It may be open in conjunction with a limited purpose healthcare FSA. So with a limited purpose healthcare FSA, those funds are only used for dental and vision. That is the only time that you can have both an HSA and a limited purpose healthcare FSA. Outside of this exception, you may only have one or the other. You cannot have both types of accounts. With our HSA, we stated earlier that you have the option to contribute any dollar amount that you would like per paycheck. Outside of that, Nolan as well contributes to our HSA accounts. This is based off of tenure. Once you've achieved your first year of employment with Nolan, Nolan will then contribute $10 monthly to your HSA account. On year 2, $20 monthly, and year 3, $30 monthly. This does cap out at a $30 max. So for example, if you've been here 10 years, you will still just receive the $30 monthly contribution to your HSA account. You hold full control of your HSA account. So should at any point you retire or no longer be with Nolan for any reason, you still have the funds that are available in that HSA account until those funds run out. Again, HSA covers medical expenses only. So once more, a list of those qualifying medical expenses are provided in the link below that you can click on. Some examples are going to be, again, Band-Aids, prescriptions, medical equipment, medical services, different types of ointments, hygiene to an extent. So the list is very, very diverse. We encourage you to click on the link below in order to receive those details. Thank you for joining our session today. Should you have further questions or need more information about FSA versus HSA, we ask that you email benefits@nolanred.com, and we are happy to help you. Have a great day.